Eric Mwathe with a weekend analysis for November 23rd, 2013. So we saw the Dow making an all-time weekly closing high, weekly daily closing high, up 0.65% for the week. Very nice close. We saw the Nasdaq end the week positive, about 0.14%. Another multi-year weekly closing high. S&P 500 for the first time ever trading above and closing above 1800. So very impressive market there. So we're going to go into the weekend analysis video to see what we can glean as to what the market wants to do for the rest of the year. Going into the last week, also going to be a short week because of the Thanksgiving break. But before we do that, I want to remind you guys that you should go to www.marketfire.com, and I'm going to have a link at the bottom of the video description. So go here, click on the free webinars right here. So click right there. And I want you guys to go ahead and register for my, see whether I can get that. Register for the webinar, which I'm going to have on Tuesday. See whether I can get that to show correctly. So the webinar is set for Tuesday, November 26th at 4:30 p.m. Eastern Standard Time. So go ahead and click on the reserve seat here so you can get into the webinar. If you can't make the live event, then just go ahead and reserve your seat so I can send you the recording after the event. So either way, you'll be able to get the recording either live, or you can get the recording after the fact if you register your email there. And I'm going to be discussing how to use the MACD correctly, and this is correctly, to time mega moves in the market. So how to time the MACD correctly to time mega moves in the market. So go ahead and reserve your seat. Let's do it now before the space is booked. So now that I'm done with that shameless promotion on that webinar, but I'm going to be discussing a very interesting topic on how to use the MACD. So do make a point of watching that. It's going to be a good video. I guarantee you. All right. So we'll see you on the webinar Tuesday 26th at 4:30 p.m. Eastern Standard Time. Let's take a look at the Dow. Begin with the Nasdaq weekly here. See, the Nasdaq is still holding above the weekly buy point there of 38.43. So this market continues moving higher. We talked about the fact that the RSI trading above 69 here could mean that this thing is going to go on until it stops. So as long as it's trading in that level, this market could continue pushing higher. It's almost impossible to pick the top here. This thing could go on as long as it's above here. You never know when it's going to stop going high. If you take a look at the Nasdaq daily, seems to be a going problem here with improving daily closing highs, but we seem to be making lower lows on the technical. So this negative divergence could become problematic down the road. So let's keep an eye on that. But that making new highs with not very strong technicals is not a good sign. Let's take a look at the Dow weekly. The Dow weekly is now 3 weeks above this previous weekly buy point of 15,658. So broke out there, and it has been 3 straight weeks. That's a very strong market. And unless it can break back below that level here, anything above that level suggests this market wants to move high. Just like it broke out here, beginning of the year, never looked back. You know, this breakout seems very healthy. We were expecting resistance at this level here on the RSI, which connects to these highs here. And if I can just repeat that, because this was a sell point, was the high there. This blue line was a sell point, was the high there. Double top sell point was the high there. And recently that was a break of that level, which was this top. So the market, I was expecting resistance around here, but the market has taken that level above that. And so, you know, this could continue moving higher. we'll keep an eye on that. But the level to watch is 15,658. Anything above that suggests that the market continues to be healthy. S&P 500 weekly. This is week number 1, 2, 3, 4, 5, 6. 6 weeks above the buy point of 1709. Impressive. That's all I can say. Unbelievable. And you can see that earlier on, about a month and a half ago, this seemed like we were forming negative divergence here, but the market broke out here and has, since had this move here on the RSI. Very powerful looking market, and the MACDs are all pointing to the upside, all of them pointing to the upside here. This is a very strong market, very strong. Let's take a look at the S&P 500 daily. Again, we see that negative divergence developing here. We have higher highs in price, and we got lower lows in technicals here. So this negative divergence is something we need to keep watching, because if that remains the case, this market could eventually pull back. S&P 500 60-minute chart or hourly chart, you see another negative divergence making a higher high in price. As of right now, we are making a lower low in technicals. So if this thing reverses here, then that's going to confirm negative divergence. It hasn't reversed yet, but the market is starting to show signs of, on an hourly basis, at least pulling back a little bit. Let's take a look at the QQQ. And I posted this on Twitter earlier, because what I was watching here is, if you take a look at the QQQ from an hourly chart, we are back at intraday highs here on the QQQ here, but the technicals are interesting. Take the high here and the high here, draw a straight line. We are precisely at this point. So if this turns around and reverses here and confirms this top line, then this could be a high in the market. So that's one way I'm looking at it. Another way to look at it is, if you take the hourly lows here and this low here, draw a straight line, you see that now we are back testing this level here. So one way or the other, either this is going to be a stall point here on the RSI with a move lower, or a breakout, and the market is going to tell us which way it wants to go. Let's take a look at the VIX hourly as we look at short-term. And on the VIX hourly, what we are looking at here is, we are expecting the VIX to eventually break out above this level here, short-term, for us to have a spike. Lately, we've been stalling at this blue line, which corresponds to the break here, and the VIX was trading at about 1950. We've banged heads previously here, it was here, and recently that was at top, and that why we pull back. So the VIX is not looking very strong hour to hour. The only way it can really spike is if it breaks out above that level. It's about 1350. So the VIX is not telling us the market is really in any type of fear mode. If anything, the market is just saying, we're going to do what we need to do. Market is very strong, especially, let's take a look at the monthly charts, which is where I believe we are getting a lot of our thrust to the upside. Take a look at the monthly for the NASDAQ. A very nice monthly chart. Take a look at where the RSI is trading. This is just a sign of power, and this thing can continue moving higher until it stops. But this is a very strong looking market, especially with this RSI trading above 69.10. Take a look at the Dow on the monthly. Dow is also joining the NASDAQ, trading above 69.10 again. You can see a monthly breakout here. That's a very strong market. This market has the opportunity, if it wants to continue pushing higher, and do that, especially if the RSI continues trading in this level here. This market could see 16,500, even 17, if and only if it stays above 69.10 on the monthly. Take a look at the S&P 500 monthly chart. And again, we are making multi-year highs on the RSI monthly, which might explain why we continue making fresh highs. So as long as this thing is trading and making higher highs on the RSI, this market is going to push the price to further all-time highs. Take a look at the BKX, the banking sector, and we're going to take a look at the weekly. Take a look at that weekly breakout. It's absolutely powerful breakout above 65.98. That's a fresh breakout there. Looks very good. Take a look at the daily. Early on the daily, actually let me give you the actual daily chart here. Let's get the daily chart for the QQQ. Actually not the QQQ, but the banking index. Daily index for the banking index is, I was expecting resistance here on this blue line last couple of days, last couple of weeks, because that was the break there and that happens to be the high. So I was expecting this resistance that took place there in October, and that was the high. But now the market has broken out above that blue line, which means that this daily breakout now has an opportunity to do whatever it wants. It could continue pushing this market high. The fact that it's breaking out above this level here shows that it has now the opportunity to move higher. You can see all the MACDs pointing to the upside. So until these things can move back below zero, this is good. MACDs, all the MACD settings look very powerful. Also, if we take a look at the banking index from a monthly chart, and this is scary good. If this thing stays above 65.77, this monthly closing high, if it can stay above that, wow, it's scary good. In other words, this could really blast the RSI to multi-year highs, and this is really going to push this instrument to unbelievable levels. So we need to watch it. If it stays above 65.77 on the BKX, this is a market that really wants to take off. Another way to take a look at this is to take a look at the XLF. Bring the XLF because I know that's what most people watch. And the XLF monthly, taking a second to load. XLF monthly, as you can see, as long as the XLF is breaking out and holding above 20.41, that's a fresh breakout there. Anything above 20.41 is a fresh breakout. You can see the RSI is back above 69.10. This is very powerful. Now, if you want to understand what happens when stocks move above 69.10, take a look at that time period here in 06-07, which corresponds to this move here, this breakout, and which took it to its highs, eventual highs there. So when markets are trading in this general area here, like if they trade in this general area, you'd expect prices to push the banking index, financial space, to multi-year highs. Now let's take a look at the IYR daily. And what we are looking at here is, okay, so what I want to talk about, I've been bearish on this part of the market, but if you take a look at the daily, something to watch is this line that I'm drawing, the blue line, has been very good at predicting lows as far as the IYR is concerned. So let me show you the blue line here. This, once it found back above that line, that was a nice entry point there. Eventually found support here back above that line, which was this nice entry point, back above that line here, which was this nice entry point. And you can see right now seems to be holding this RSI here. If the RSI spikes from this level, then this is going to be a short-term low, and the IYR could move higher. Now, to contrast that, if you take a look at the XHB from a daily view, you see XHB not looking very strong. That's why I've been bearish on this sector of the market. Looks slightly weaker, not making new highs. Seems to be resistance at this level. Resistance going back to this price range here. Can't seem to move above that, hasn't done so. Also on the RSI, this level here, ever since we had this break, which happens to be the high here, we've been stalling in this general area. We stalled here, which happened to be this high there. We would stall here, which happens to be this high here, stalled here recently again, which is this high, and you can see right now we've formed a double top. Very hard to see, but we formed a double top. So if this thing continues pushing lower here, then this eventually also pushes lower. Let me show you that double top. You can see the double top now. We draw it. You can see that daily RSI double top. So this is an area in the market that to me is questionable. Take a look at the XHB from a monthly view. Now it's going to give you a different look. Markets are confusing. And you can see on the monthly breaking out above 30.87. So if you want to short this part of the market, you'd wait for it to move back below 30.87, which would suggest it's failing to hold the breakout level. For now, it's breaking out, so the dailies, are confusing, but the monthly is showing that it is above the monthly buy point of 30.87. If you want to short this part of the market, wait for it to move back below 30.87, confirming that that is indeed resistance. So if we take a look at crude oil, we're at this general area where it's been finding support going back to 2009. There was support there on the blue line, which happened to be that entry point, very nice entry point. Support on the blue line here, which is this level here. Support on this blue line here, which was this entry point. Support here, which is somewhere around here. Recently support there, which was this low. So this line, blue line, has really been nice at telling you where to at least try and play for a bounce here. And this also happens to be an area which connects the lows on the price channel. So we can either find support at that level and move higher, find support here and move higher, or we could break down. So right now it looks like it wants to find support, as you can see, on that level. So I might say that this is where we've seen the worst in crude oil. Take a look at the monthly. The RSI shows that this is where you'd expect support, and it's right at that line. Also on the price channel on the monthly, you take the monthly closing lows, draw a straight line. We are somewhere on this line, so we are either going to break down here and move lower, break down here and move lower, or we're going to find support at this level and bounce, find support here and bounce. So one or the other, seems like we're trading quite at a point of, critical point here, support or break, critical point here, support or break coming up for crude oil here in the next couple of weeks. Now I want to take a look at the TNA, 3 times long, the technology space. What I want to show you is each and every sell-off starting from about here, each of these sell-offs here, and they've been minor. All of these sell-offs began with negative divergence. There was negative divergence there. There was negative divergence there. There was almost a flat line there, and also flat line there. So negative divergence began all these moves lower. Right now we are making a higher high in price, a higher high in price, and what's really interesting is we are making a very steep negative divergence. So if the market rolls over around here, this is going to be, to me, a major sell point. So I'm watching this to see whether this negative divergence holds. If this negative divergence holds, then maybe this move to fresh highs is one that is going to mark a major high as far as the TNA is concerned. If we take a look at social media, the ETF that tracks the social media, SOCL, and you can see that this was a buy. Once it moved above the green shaded area here, it was a buy here, and it stayed a buy as long as it was above the green area. We see that we are back to this general green area here. So this could be where we start seeing a break and a pullback. If this thing can break below 1882, which is this low here, we might see lower prices for social media, which might bring down stocks like Facebook. Might also mean that, LinkedIn could see lower prices. Pandora, you got Twitter now. All this might see lower prices if this thing starts breaking down. And so that's one thing I'm watching to see whether it can stay above the green area. If it moves below that, that's not good. Now take a look at the MACD. the MACD is starting to break and also could move below zero here. If the weekly MACD moves below zero here for social media, it's going to suggest that the technology space and also technology and the market in general is going to be on a major pullback.